Hello all. Thank you for joining this session. Very, very interesting session. I think we were talking in the green room and everybody was saying the pensions are boring. And I think if you look at the panel, pensions is sexy. So thank you all for being here to encourage us on. Talking about demographics, I think this has been one of the topics globally which has taken center stage. Given economies and countries are aging, there are three different stages. Of course, the ones that are advanced at aging and the ones that are young and the ones in the middle. But having said that, the country that we're sitting in today, yesterday, Jesper, you mentioned that, 1 in every 4 people is above the age of 70. And if you look at Africa as a continent, as a contrast, the average age in the entire continent of Africa is sitting at 19 to 21 years. So there is a demographic dividend and there could be a demographic delay that we're looking at. And what are the impact that this has on the entire economy? So I'm going to dive right in. We have very short time and the topic is vast. Peter, I'm going to start with you. Given the numbers and what does the demographics in Japan looks like, just to set the stage, to give perspective to the audience.
Thanks very much, Parul. I'm delighted to be here. Well, I think it's pretty well known that Japan has the world's oldest population, so that if you look at the share of those over age 65, it's about 28% currently. And I was looking at some of the other numbers. Second is Spain at about 23%, and then France and Germany not too far behind, but certainly there's still a pretty big gap between Japan and the other countries. And there are two factors behind that. First is the very low birth rate, which is somewhere between 1.2 and 1.3 for that is over the life span of women. And that's actually fairly similar to some of the other birth rates, both in the region like Korea, Hong Kong, and also France and Spain, Italy. But then you also have the very long longevity here. That I think currently it's about 81 for men and age 86 for women. So both the decline in the birth rate and the increase in the longevity have been contributing factors. But the key message is that it's going to get significantly more aged over the next few decades. So that the share of people over age 65 is going to move from 28% currently to about 38% by 2040. And perhaps even more significantly, if you look at the ratio of the aged population to the working age population, it's going from roughly 50% now to somewhere between 70 and 80% over that period. And at the same time, you're still seeing an increase in the average longevity. It's increasing about 1 year per decade. So you're going to get a more and more extended top of the population pyramid. Many more people are going to be over age 90, over age 100. So it's going to be quite a significantly aged population.
That could necessarily not be a bad thing. I have to say that. And there are different perspectives, and that's exactly what we want to discuss here today. The socioeconomic reforms that are required that we require, given that aging involves not only a good social security system, it involves health, better labor markets. I know, Yumiko, you've been closely linked with the policy making side on the pensions. And I'd love to know the steps that Japan is taking. I know there have been comparisons to other countries as well, or learnings. So it'd be great if you could give us a perspective on how Japan is taking that and how it stands to other schemes in the world.
Sure. It's not exactly the pension issue per se, but there is a very interesting discussion around retirement payment in terms of how it's treated from the tax perspective. So as you probably know, some of you at least, there is a pretty good tax incentive for companies to give employees, pretty good retirement package at the, when employees are ready to retire. As you probably know, most Japanese companies still have this long time sort of lifetime employment system. That's what it's called. People join companies at the age of 22 when they graduate, and they stay with the same companies for 35 years. At the end of their salaryman life, they receive this retirement package, and that's currently given a pretty attractive tax incentive. Now, there is a discussion, as part of the government committee to discuss this, to address that tax incentive. So that is one of the potential reasons as to why people tend to stay with their companies as they are, getting older, 40s, 50s, and they kind of start thinking about, retirement. And when there is a pretty big financial incentive, a tax incentive to stay with the same company because there is a good tax break for the retirement, then you kind of stay, right? Anyway, so this is something that my colleagues at the Economic Council for the Prime Minister discussed last year in terms of how that tax incentive should be changed, basically make it neutral, right? So this was discussed last year. It has not really gone through in terms of, having an actual law. There is a possibility that this topic might come up this year. So there is a chance that we may see a potential change in the law. When that changes, I do think that would be another reason as to people would have, more incentives to look for other opportunities outside their own companies. And that has a lot of implications in terms of how people have control over their, wealth creation, including pension, including retirement payments. Right now, as I said earlier, when companies basically control your life because they pay your salaries every month, and at the end of your salaryman life, they pay you, pretty big lump sum retirement package. But when that tax incentive can be changed or is changed, potentially that could create a much higher level of labor market mobility. So my point here is not only the pension or, in a way, retirement, savings, we're talking about here. It has a lot to do with the labor market structure. I do think this is going to have an impact on people's psyche in terms of how they have or not have ownership on their own in terms of creating their financial security. And it's actually a very exciting time because this is the first time we're seeing real change, potential change on the legal and the tax side, but also look at the stock market, right? And look at NISA, right? NISA is a very good example when there is the right amount of incentives, tax or other thing. People do the right things. People act pretty rationally. So I think these are the things that are changing now, and it's a pretty exciting time for Japan.
That is the optimistic side of Japan as well, because there's a lot of behavioral angle. What Yumiko just said, that people do the right things. That's also because we're sitting in Japan that people do the right things. Jesper, coming to you, I think it just sat in my head, and I think I've repeated it to myself and to others on the conversation that you had in another panel yesterday. While Japan is aging, there's also the young today are also going to have this inheritance boom, and hence have better liquidity and pots, money pots that are at their disposal. How is that going to affect the long term, or how is their effect on being able to save and have other options be impacted? I'd like to elaborate on that.
No, and look, here we're talking, average age in Japan is 50. I've been stuck here for over 35 years, and I love being here because everybody else gets older faster than I do, which is really nice. So it's a good country. But the one thing is, Japan got rich before it got old. This is the world's largest creditor country. This is the world's largest, pension scheme. The Japanese public pension scheme is the largest non-American owner of American companies. They've had, a very, very solid revolution, the GPIF, the government public pension system, during the Abe administration, when it was really taken from, a public pension fund that was run by Marxist university professors, to now being, one of the envies of the world. For example, it was one of the spearhead lights in ESG investing and promoting that, with public money there. So there is a lot of things. Again, the nice thing about demographics is that it's utterly predictable, right? And, nobody, people are very, very pragmatic about what has been going on. And there have been cutbacks, in the payouts. There have been, increases in out-of-pocket expense. There's been a change in the pension indexation to inflation, so that actually, because of the years of deflation that we had in Japan, you're actually going to get less money, than you originally got. So, it sort of works on both sides, managing the assets more effectively and basically cutting down the liabilities without, hopefully, the voters noticing too much about this, right? So the interesting thing is, and this is, I think, the key issue that people forget, is that over the next 8 years, you will have the equivalent of about 1.3 times GDP, 1.3 times national income, basically becoming unstuck from these high savings of the baby boom generation, because of death. And, yes, the government has, a marginal inheritance tax rate that is very high at about 55%, but actually the average tax paid, is about 22%, right? And now, as Yumiko pointed out, since January 1st, we do have these tax-free savings accounts, which actually allow you that you can tax-free save, up to 19 million yen. Which is enormous, given that the average savings pool, right, of somebody who is in their 30s and 40s, right, the average savings pool is about 7.5 million yen. So you've got an enormous incentive to actually, transfer these deposit savings, the mattress money that you inherit from your father and mother, God bless them, to actually put that to work, right, into, capital markets. And that's exactly the tsunami of, what we're seeing right now. And as Yumiko pointed out, you've changed the incentives. As a result of that, the shift into riskier assets is actually start to happen. And that creates enormous opportunity, because the people inheriting this money are internet natives. They do not want to sip tea with their broker or insurance broker, and discuss something which is what the old generation did. They are perfectly capable and want to have, direct, self-directed advice. And this is where the fintech opportunity here in Japan is absolutely amazing, because you've got this pool of money. We're talking about basically $5 trillion in US terms over the next 8 years, right? This money needs to be allocated. And if you can provide the proper advice, you're going to make a killing. How was that for Mark?
Well, shout out to all the fintechs, including me. Note to self. I think just on the technology thing, I'm going to pivot a little bit from a country which is age, and the average age is 50. I'm going to move to Sherie, where she is coming from a country where the average ages are probably 24 or 25. I think a role of technology in the delivery of financial services, especially when it comes to long-term and medium-term savings, and the insurance space that Sherie works in. Sherie, what has been your experience different from what Tokyo is, just to give a perspective of what the other side of the world actually looks like?
Thank you. I think I love exactly what Jesper just talked about. You set the perfect stage for my conversation. So I am working primarily in the developing markets, where you have a very different societal problem to solve. This could be in the other extreme, where you have very, very young populations, and definitely, affluence is not the topic. It's about how do you create an environment of financial inclusion. So the only way to solve the problem of such capacity and skill is through technology. So what we exactly did in the Philippines is basically, I call it ABCD. We built a AI-powered blockchain engine where, to your point, Jesper, it's to serve the new generation of digital native. They get onto an app and they can design their own, tailor-made their own financial solutions and financial protection that they need. So what does that mean? That really then removed and create the innovation from a product perspective and remove a tremendous cost into the traditional system, so to speak, so you have an ability to provide affordable solution at scale. And that's where, I think Yumiko talked about the fact that tax incentive is very important. And so we also work with the government to create a new concept of tax-free savings, but you don't put savings into the account just for that interest rate. You get tax-free, you get interest, but at the same time, you use it for investment products. So in developing country, they got to think about their children's education, having a roof over their head. So we created, small sachet investment products to allow them to start thinking ahead, thinking of the future, which is not easy in the developing market. But you can only do this through technology, which is why we came out with the approach, because AI and technology on cloud with the data can get you at scale in a very affordable and cost-effective arena. But what's very, very important, without AI, there's no way I can hyper-personalized financial solutions to hundreds of millions of people here in the Philippines.
Thank you. Thank you. I think I picked up one thing quite distinctly is while you're sort of making it simple for people to have a larger uptake on financial services. I think the difference lies in the taxation as well, because for a larger population like Philippines, it's difficult for the government to give tax incentives because most of the people are in the informal sector workforce. I would reckon 75% of the population. While in Japan, I think less than 10%, please correct the numbers, people would be in the informal sector workforce. That means they're not drawing any formal sort of, provident fund or pensions or retirement benefits. Hence, the fiscal burden on the government increases in developing countries than those on developed countries, which they're not able to sustain. Peter, just sort of talking about this, even Yumiko mentioned that the tax incentives, there is a revolution or there is a conversation to change or sort of design differently on the tax incentives. But this also requires, while the tax burden should reduce, because the sovereign burden is a lot when it comes to the aging population. But then the youth also have to think of supplementary savings. What is it in this design framework that the youth in Japan could do? Given to Jesper's point, they're going to have a lot of money.
Well, I think that there certainly needs to be more incentives for savings for the younger generation, so that all these new developments like NISA are going to be helpful. Whether how much they're going to help is still somewhat unclear. So therefore, you have to think of maybe what else can be done also. So there may be other kinds of tax-preferred programs also that could be implemented. I mean, yes, we mentioned that the average savings was about 7.5 million yen, but that may be a rather skewed figure. That if you look at the modal savings, it's probably rather less than that. So that there really has to be a kind of a long think about how to incentivize people to save more and not just have the let's say shifting from the bank deposits to the NISA accounts, for example, but also actually raising the savings rate, and that I think still needs more policy thinking on.
right behind me.
He wants his own mic.
Just very quickly, I mean, and to Peter's point, right? I mean, look, when I was on one of these government advisory committees and we talked about pension, and there's all this wonderful stuff. It's like, should your discount rate be 7.5? Should it be 8.5? And what happens if it's 8.69? And all of this wonderful actuarial stuff, which puts anybody to sleep, I hope. But look, the what I said is like, the reality is like, the only way to assure a functioning pension system is to make sure that our children earn twice as much as we do. You need rising incomes. And, this is the second part of the positive development that is going on, which is the reality of the younger generation now being in short supply, exactly because of the demographics. The number of university and high school kids graduating is declining every year by 50, 60,000 kids. So as a result of that, you actually find that wage and income growth of the younger generation for the first time in 30 years is actually increasing. Remember last year on January 4th, Japan's richest man, Mr. Yanai, the guy who built fast retailing, Yumiko, right? He stood in front of a microphone and said, I'm going to raise starting salaries by 40%. Now, Mr. Yanai, sorry, for 38 years, you didn't raise starting salary. So it's the first time in 38 years, but they're going up 40%. And you actually do see that because of the demographics, right, which is the topic here, right? Because of the demographic here, all of us want to be reborn as a 23-year-old Japanese because you've got the power, right? You've got wage bargaining power. And that's exactly what's starting to happen. And so you find that the ability, like at Monex, we do these surveys, right, of savings behavior, risk appetite by age group, right? And of course, anybody over 50 doesn't want to take risk, right? They're not going to buy Tesla. They're not going to buy, they don't even buy an ETF, right? But, they're very happy to hold their cash because they're worried, and they know, that their demand for cash, is going to be increasing, which is just normal human, life cycle behavior. But the younger generation is now, gaining income, right, well above inflation. The younger generation, is gaining access to credit because the banking system here is arguably the best capitalized banking system that we've got in the world right now. And so you find mortgage activity, you find consumer credit activity. All of this is exploding because you've got a younger generation that gets better job, that gets now lifetime employment, not geek employment. As a result of that, they become credit worthy. They buy a home, and with a little, they're even going to get married. No, but in all seriousness, you've got a virtuous cycle that is starting here, right? And, what the government can do from a policy perspective is to actually ease the labor market, even more so that you do have full portability of your pension, full portability, of your insurance, right? That would help free things up further.
I wanted to touch upon the labor markets, but I don't know if anybody noticed. He said young people to himself. I don't know if anybody else noticed that. Yeah.
I'm very pointing to you.
No, you were not. I was with you. All right. No. Because his secret desire is he wants to be a 23-year-old Japanese girl. I know. Well, okay, so here's the thing. Even if he wants to be this 23-year-old Japanese girl, and he's going to have this lot of money, but he's not going to produce enough babies, right? And that's going to have... And then,
me. I mean, you haven't seen anything yet.
And that's going to have an impact on the labor markets on a really serious note, right? And while we are having this aging population, there is an opportunity. We were talking about mattress money, moving on to the youth, having this opportunity, portability, so on and so forth. But there is not enough next generation that is going to come thereafter. And that has serious impact on labor markets. And I say this also from the economics and the fiscal side, but I also say this from Japan, from the tradition and, the societal norms. Yumiko, serious opinion, like radical and sensational view. Come on.
Well, the question is, how come there are not enough babies in this country? Honestly, yeah. Wait, what's your? I have 3, so I'm making my contribution here. So good point, but I'll get to that. But just going back to the earlier comment in terms of pension portability. So we have, when I was working for the OECD for a long time, and we looked at different countries' policies. There's a clear case. There's a positive correlation between the labor market mobility and pension portability. So there is a very good study on Netherlands, for example, Holland. There's a very, very good study there. In the U.S., as you probably know, 401k, when it was introduced, we started to see a positive correlation in terms of how people are willing to move more freely within the labor market. So I do think it's a sort of, in a way, proven policy in terms of, if you really want to see mobility in the labor market. So I'm already, I'm sort of in the startup space, so I see a lot of that, which is actually very, very dynamic now. It was not the case 5 years ago, 10 years ago. And it's, we talked about pay. Now there are actually quite a few startups who can be very competitive in terms of, financial packages that they can offer, even compared to some larger traditional companies. And again, think about this change that's taking place. So traditionally, people join the company, whatever company, stays for 35 years, expecting to have this pretty big package at the end of 35-year, salaryman life. It's no longer the case in many companies. They're changing that, right? So when you take into consideration, you're going to do a sort of cash flow discount, right? What's the present value versus, it's actually not looking all that attractive in many cases. If you are a 22-year-old, university graduate, am I going to join this company expecting to stay for 35 years and I get this package at the end of my 35-year, life? Versus you you join a startup, no job security, but quite frankly, in this age, there is this notion that, especially among young people, they have more control over their own financial security, whether it's through NISA or other financial instruments, and that's a big change. And therefore, that's also not an incentive for people to take more risks in terms of career risks. So that's exciting. I also think that is going to help in terms of how women, we can have babies. You can't, right? So life events, that's a privilege, right? So quite frankly, the Japanese labor market system is not very friendly because it's seniority-based compensation, seniority-based promotion. If you take time off, even if it's short, you kind of start your clock again, you reset, right? So your salaries and your promotion, your prospect, right? So that is not very friendly for women, especially if you are interested in pursuing whatever career. And the job market mobility is a very positive trend for women in particular, especially if they are going through life events that are very unique to women, having, basically starting family. So I actually do think what is happening today in the labor market is going to contribute to hopefully higher birth rate. I do think, people have desire, and not everyone is different, but there are people, men and women who might give up, having big family because of the work they do, because of the employment contract they have, because of the sort of working hours. And quite frankly, that's a pity. And I do think the mobility in the labor market is going to be a very positive force to change that trend. But you still cannot have babies. You have to rely on your wife.
Yes, Jesper.
Sorry. So the other thing is immigration. When I showed up here in 85, there were 500,000 non-Japanese living in this country. Today, there is 3.2 million. And of those 3.2 million, about 2.2 million actually work. There's been an enormous amount of visa deregulation. When I showed up, it would take you 10 years before you could apply for permanent residency. It now takes you 4 years. Now, it's still Japan. You're not allowed to fall foul on the law. So if you apply after 4 years for your age, you can, for your permanent residency, and you had a parking ticket in the previous year, you're back in the queue. So the rules are the rules, and you better apply the rules and live by the rules here. But, the immigration thing, you can actually show that already of the people who actually work in this country, that already about 5% are non-Japanese. And, it's not a weird forecast to say that by 2030, you will have 10%, who are non-Japanese. Japan is an extremely attractive place to come. Last year, Seven & I, the great convenience store company here, Seven & I sold its first franchise to a non-Japanese. It's a young woman from Myanmar who came to Japan on a Mombusho, on a government fellowship, to study for 11 years. She started working part-time, and now she owns the franchise. And 7-Eleven actually is putting together a program, that will, when you work there as a part-timer, as a student, as a non-Japanese, they will give you courses in Japanese tax accounting, in Japanese business etiquette, in Japanese IT, and after 4 years, they will give you a loan to buy the franchise.
I think that's an extra trip on immigration as well. So anybody here can consult him later for any further tips. But I think that's a very interesting point. I'm going to come to you, Sherie, but Yumiko, just one quick question. When we look at immigration, which will impact labor markets here in Japan, there will also have to be tax incentives and social security for the non-nationals of Japan, which is something that the government probably needs to start thinking today on the impact. Do you have a view on this? Because this is also like an interesting...
They are actually a very, very good economic actors. They are contributing to the social system. So quite frankly, the more the better in terms of having a more sound social security system in Japan. And as your point, we need people who actually can help to fund. And these are the young people who are making money today, not the people who are about to retire, right, or have retired. And quite frankly, these non-Japanese people migrating to Japan, they belong to that category. So quite frankly, I don't think it's a negative. It's a very positive element that we have to take into consideration in terms of what the migration situation can do to the social system. So, it may be slightly different in other countries, to be honest with you, in terms of how quickly the migration has become a social problem in some European countries. I know because it was caused by a war, for example. In the case of Japan, it was more of a, economic driven decisions versus, war-torn countries sending, millions of people to to other countries in Europe. So the speed is probably different in some countries in Europe. But in terms of the social security and social system burden, I would take this as a very positive element, not negative at all. At least in the context of Japan.
No, I think this is globally anyway a positive sense. I think sometimes some papers may sort of indicate otherwise, but I think if you look at the entire economics of it, I think it is a beneficial thing, especially in the Japan context.
But what's relevant for you to build a business here, you will not have a problem, hiring a non-Japanese engineer. Not specifically.
Yeah.
You will not have a problem hiring you've got to fill out the forms, and the Japanese are meticulous and pedantic and all of that stuff, but, I sit on 3 startup boards, and we haven't had a single issue, right? Getting any foreigner coming in. So again, sort of there may be a little bit of a perception gap, and for the opportunity set specifically for fintech, right? So you've got an increase in demand, right? You've got an increase in potential supply because there's digital natives who want different tools, right? You've got the technology, you've got the systems, you've got the ideas, right? And so build a presence here in Japan, hook yourself into the Japanese ecosystem, show that you don't just have great ideas, but that you can actually deliver high quality, and you will be very, very successful here in Japan.
Thank you for that, Jesper. Just coming to you, Sherie, almost out of time. I actually wanted to also ask, because whether it is Japan, which we were talking about, a strong sense of trust, I think education, financial literacy, design a product is a good combination to look at a success of delivery of financial services. How has that been integrated, given that Philippines, you spoke about AI, you spoke about, all the other good things and what, but it requires delivery, which requires trust, and softer things like financial education is a very important thing.
developing economy where you're very, very young population, are totally different. I just want to come back to what Jesper and Yumiko just talked about. I think somebody in the audience earlier introduced the word of re-globalization. And I think it's a phenomenal opportunity where you have a capital-rich country and you're talking about labor mobility. I guess the movement between a capital-rich country where, you had capital looking for high growth and developing markets where you have labor mobility looking for high opportunity, especially in the world of digital and fintech. I truly believe that it breaks down the physical boundaries, whether it's demand for products or demand for talent or the ability to supply. Again, we are all talking about financial institution and financial products are built on trust. Back to your question about education. So we've been spending quite a lot of effort working with public institutions, really coming from the perspective of building for that longevity of financial protection, helping people break down their perspective on, do I spend my dollar on a Starbucks coffee or do I put it into the systems where it will build for my future protection? And one of the most powerful way to do it is, of course, coming from where I am, from an app where you give them the power of visualizations. In the past, you go to the bank, you put their savings, and you hopefully 20 years later think that, that savings may multiply. But today we give them with technology the ability to visualize the impact. My $1 becomes X% more, and as it builds on multiplier and compound interest, you slowly educate and bring them into a system of thinking about the future, thinking about financial protection.
Thank you so much. We're out of time. We shoved my mic also. We're out of time. I had a lot more questions around adequacy of returns, how are labor markets impacted with the next generation coming in. But this is all that we have time for. We could have another discussion, but thank you so much, GFF, Peter, Sherie, Yumiko, and Jesper. Thank you so much. Thank you for being here today.